morning. Today is Wednesday. It's January the 11th, and the time right now in Singapore is 9:17 in the morning. And after this recording, I'll be heading to the airport. I'm going to Kuala Lumpur, Malaysia for a visit. And overnight on Wall Street, the market was basically in holding pattern. Although there was a speech given by the Fed chairman from Sweden. Yeah, he was in Sweden last night, and he gave a speech and did not give us any surprise. He basically maintained a slightly hawkish view in the sense that he's telling us that there will be no rate cut this year, and interest rates likely to stay elevated for the remaining of this year. So basically, it is nothing new. We already know his basic stand. Of course, there are market participants who believe otherwise and believe that at higher interest rates, it will cause the US economy to slip into recession, and he may be forced to cut rates. So until that happens, we will have to assume that he's speaking the truth, and he's telling us that interest rates are to stay high. So we will have to treat his comment as what it is right now, and the market is not reacting very much last night. And of course, the main event for this week will be tomorrow's CPI release. So that will be the highlight for the entire week. So we will have to see what the number is. If we still continue to see easing back of this headline CPI numbers, then maybe the idea that the Federal Reserve may have maybe in a position to actually slow down its rate hikes may gain credence. Okay, so until that happens, we will have to depend on what we can see from the price chart. Overnight on Wall Street, we can see the Dow Jones did not challenge the Monday high, which is at 33,965, which is very, very close to just under 34,000. You can see that the market actually right now is at the midpoint from the high of 34,712 to the low point of 32,573. So this is a 61.8 kind of retracement levels. Okay, so we can see that the market is having some kind of reaction here. We will have to see what happens. I think tonight will be more or less about the same. I think the market will still be drifting along, waiting for the release of the CPI numbers tomorrow. So no firework expected tonight. So on the other hand, we can look at the S&P 500. Is also moving very close to the 61.8 retracement level from 4,100 to 37,061. No, 3,761. So this is like a midpoint. So usually when the market have a retracement like what we are seeing right now, it usually will be capped at the 50%, if not at the 61.8% Fibonacci ratio level. So now the market is around these levels, though we will have to keep an eye out for it. So if the market couldn't sustain, it will likely fall back down again. And looking at the structure, it does give us the idea that perhaps upside is pretty limited for now. Okay, so we will have to treat this rebound from last October low of 3,491 to all the way to 4,100 as a corrective rebound. So it is nothing more than a corrective rebound. The underlying bias is still to the downside in the daily time frame. Okay, so on the Nasdaq itself, the retracement has been even shallower. So far, we can see that the Dow as well as the S&P 500 are testing the 61.8% retracement from the most recent high to low. But we can see the same thing is not necessarily the same in the Nasdaq 100. The retracements only managed so far at a 38.2%. And if it cannot go beyond this level, I think the market is primed to test the downside. So typically, if we can see the market only retrace less than 50%, it means that the market is inherently weak. Okay, so we will have to see what will happen upon the release of the CPI tomorrow. And my guess is that it may be trading to the downside, but again, we will have to see what the market do. Okay, over in Hong Kong itself, we see that the market has actually stabilized. On the higher end, the market has not opened today, not yet. So the high yesterday was 21,487, very, very close to the last June high of 22,449. So based on this, I think either the market hit the 22,118 first, or it will go up and attempt to test the 22,449. So by and large, you can say that this rebound from the October low of 14,597 is basically seen as a three-wave rebound. Although this three-wave rebound has been very, very steady so far, it may develop into something else. But for now, I can only treat this as a counter trend rally, which the main trend is still very, very bearish. Okay, over in the Shanghai Composite Index, we are seeing basically the same thing. we see prices has gone up to 3,186, which is on Monday itself. So far, it has not challenged this high any yesterday, and we do not know whether it will do so today. Okay, so again, this is a three-wave structure. So based on this structure, there is scope for the market to even go beyond the December high and even perhaps test the September high. And for all I know, this thing has a little bit more room to go. Okay, and if the market take out the 33.08 levels on the market, is primed to go even higher. So the fundamental is a little bit different from the United States. Okay, so the US equities and the Chinese equity market does not necessarily move in lockstep. Let's see the Nikkei 225. Nikkei 225 this morning have a breakout. The high traded so far is 26,467. This is quite encouraging because the market has been quite depressed. But I can say that this market is developing possibly into a five-way structure. And if this is not the fifth-way structure, then market is testing this recent high at 26,630. This is exactly where the market high was on December 27. So this is not crucial. Okay, it may actually exceed this level, but what I want to see is that the market rebound from this level of 25,630 is basically a possible fifth wave rebound. Okay, so market is likely to come back down again and take out the 25,630 over time. Okay, so I'm actually quite pessimistic looking at the structure in the Nikkei 225. This market is primed to trade lower in the near term. Okay, and let's look at the currencies. The dollar yen continues to be soft. Of course, yesterday we still see dollar maintaining a somewhat defensive posture. We can see the dollar yen went up to 134.80 at the in the first week of January, which is last week. And since then, the market have seen this rather relatively sharp drop, and it has not been able to rebound. So basically, I think the market may challenge the low end to break the 129.5, perhaps even lower. Okay, so the entire structure, since the market took out 130.39 at the beginning of the year itself, the market has turned decidedly bearish. So for dollar yen itself, it does look like from the daily time frame, this market is primed to go even lower. The market has turned into a bearish outlook. Okay, so do watch out for continued weakness in the dollar, at least versus the yen. Okay, now let's look at the sterling itself. Now, as the dollar retreats, of course, the other major currency is likely to gain in value because it's like a seesaw, right? Dollar goes down, the rest goes up. So sterling is a major currency. So as the dollar declines, the sterling managed to go up. And you can see that the dollar has actually gone up rather aggressively, broke a near-term support line. Near-term resistance line. Now this line becomes a support. So as the market drift after hitting a high of 122.11, on Monday itself, we can see that the market has been hesitant to go even higher. Now, if you notice, this is a rising channel. This is this blue area. Okay, this is the mid price. See that the price so far on Monday managed to go up to 122.11 and then stuck there. Yes, stopped because this is with the midpoint of this rising channel. So it does mean that this channel here does place some kind of relevance, and the midpoint is always acting either as a support or a resistance. As the market goes up, it becomes a resistance. So market must actually climb above this midpoint here and then stays above, okay, before the market can actually challenge the December high of 124.47. Okay, so basically the market, if it managed to slide back, hopefully it can hold its value on this blue line here called the resistance and support. So this is technically how I think it should pan out. Okay, still maintaining a slightly bullish outlook for the currencies. That means to say that I'm conservatively bearish on the dollar in the near term. Okay, over in the euro versus the dollar, we also have a rising channel. The midpoint of this rising channel has not been hit yet. The highest traded on Monday was 107.61, and it does look like it is in holding pattern, waiting for something to happen. And I think it is more likely to try the upper end at 1.1. Okay, 1.1 means this is my target price, at least in the near term. Over in the Aussie, we can see that Aussie also remains very elevated, although it is not in the rising channel, very much like the sterling or the euro versus the dollar. The Aussie itself is very high, trading just under 70 cents, and the market may be primed to go even higher. My target in the near term is 71 cents. Okay, let's go on to check out the dollar versus Canadian. It's one currency that I'll always be interested to take a look. So of course, the dollar is on a back foot, and very much like what we saw in dollar yen, dollar CAC is also right now sliding, and it has traded to as low as 133.5 so far, and the market right now is having a little bit of a rebound, but it does have a little bit of a negative tint to it. So likely to say that if the market ever retrace, look for opportunity to trade to the downside. Okay, my target on the downside is 1.32. Okay, for dollar CAC. Now let's take a look at crude oil. Overnight in crude oil, we see prices manage to slide back after hitting rebound at $76.72. Now remember yesterday, I've been telling you guys that after taking profit just before it hit $81.50, I have actually gone back in the market to buy, and I bought at $76 or thereabout, and the market went down lower to $72.45, and I was looking for a rebound to actually exit my long position. Obviously, I have entered too early. So good thing the market actually went up to my entry price, and I exit those long position with no harm done, and the market slides back, and yesterday it continued to slide back. So in the near term, this market may be in holding pattern, okay? But the good thing is today is in January 11, which is in my mind, based on cycle analysis, there's a very high likelihood that today we may see a turning point in the energy prices, both for crude oil and natural gas. So we will have to see whether this is exactly the case. So I'll be looking the crude oil prices like a hawk tonight as the market opens in New York. I want to see if I can reposition my long position in crude oil, because crude oil, despite the negative connotation, China has reopened, so that is technically bullish for energy prices. There are analysts that says that with China reopening after lifting their COVID-19 very strict protocol, they may actually add $15 per barrel to the crude oil prices. So we will have to see what kind of impact China reopening may have on energy. Because if one China to reopen, that means to say that they would need more energy consumption. Okay, whether it's for the factory or whether it's for consumption, family consumption. So basically, at the point in time, this could actually be bullish for crude oil prices. So do look out for potential turning point in the crude oil. Now over in gold itself, gold has been very elevated since trading to a high of $1,882 almost. You can see the market has been consolidating pattern. Now this level is already high, considering this is a 7-month high, because if you go back to June of last year, the high traded was $1,879.45. So the market actually exceeded that level, and right now it is not even falling. So I'm waiting for some kind of miracle to happen, because I still very much like to go long on precious metals, but at this current prices, it doesn't make sense to me because it's purely too high for me. And I'm hoping that market can come down and retest the support line here that you can see, this blue gradient line here. So hopefully the market can come down and give me some decent price to anchor along. Okay, the same thing is happening in silver. Silver did not manage to recover as much as gold as what we can see, but by and large, there is a possibility, because this things looks like this pullback from $24.55 may unfold into a 3-wave, and if this is a 3-wave, then the $22.70 looks like a possibility. So if I can buy somewhere within this bracket of prices, it will be a much better entry, although the market technically would have broken this rising channel pattern. Okay, so that means the market could be, if this pans out, okay, it could be a new pattern altogether, but still it is going to be a buy. Okay, now over in crypto, we see a bit of a movement this morning, but market continues to want to go up. No, sorry, this is not Bitcoin. Bitcoin is this one. Bitcoin managed to go up to 17,529.31 this morning, and the price in which it is right now is actually in the midpoint. You can see that the December high was 18,375 and the low was 16,285. So the price is actually between the 50% mark and the 61.8% mark. Typically, these two Fibonacci retracement levels tends to be able to cap any kind of retracement. So we will see whether this is the case this time. If it does, then it will be good for the downside. Okay. Ethereum continues to chart higher. This morning it had a marginal high at 1,347.50, which is still below the December high of 1,351. So we will see whether this double top here that's shaping up to looks like a double top. If prices cannot sustain above let's say 1,351, then market comes back down, then this could be a double top formation, and this is a bearish development. Again, we will have to see the market can break this near-term support here, because this is a very steep gradient. So normally it is not very stable. The one that is really stable is this other one, which is 45 degrees. So we will have to see how the market reacts near the 1,351 and see whether it can actually go significantly higher. If not, then I think the market will be primed to test the downside, and ideally to break this support line and then to test the more reliable 45 degree support line here. Okay. Over at Ripple, we don't see much of activity. The market has actually stopped just under 0.36, and the market is just hanging there for dear life. And there's a possibility one or two things may happen. There's this near-term support line here. If it's taken down to the downside, then of course it will turn immediately bearish. But the upside here is that if the market goes up, it will have to contend with this resistance line here, which goes all the way back to December last year, to November last year. So we can see that this is a more reliable, more significant levels. Okay, but if the market can actually clear this resistance line here, there's every scope the market can test the 0.39 cents to as high as 0.40. So this is the target zone, but this is my counter trend target. Okay, this market is seen as a counter trend for now. We want to see Cardano. Cardano actually have a major spike this week. We saw the price went up to 0.346 from a low of 0.238. Okay, so this is quite a significant move, because this run up here is pretty aggressive, and the pullback has been rather shallow. So the only hope I can see is that market develop into a three-wave pullback, ideally to test the 50% mark, which is at a 0.292. So that will be a much more I would say decent level to anchor a long position, because the way it goes up is pretty aggressive. I'm not sure what was the reason the market went up, but if the market can pull back to the 50% mark, and if we see a reversal signal happening along this line here, then it may give me the incentive to actually attempt to try to buy this token here. Okay. Solana also have a major spike up. You can see that the low was just under $8, went up to a high of $17.50. So this is actually quite a significant move up, and the pullback so far is even shallower than Cardano. So but it does look like it may actually end up as a three-wave to test the near-term support line here. So a break below $15.58 is not a sell signal. It's more likely to develop into potentially a buy signal, depending on how the market reacts as it moves towards this support line here. So this is a good token to consider buying, because the structure does support the idea that the market may have already bottomed out for now. Okay, so we will have to see what happens going forward. Now, this is all I have for you. Like I said, after this recording, I'm going to head for the airport. I'm going to Kuala Lumpur for a few days to meet up with some people that I knew, that I met in Hong Kong. Just basically to network. And until then, tomorrow's update will definitely be from Kuala Lumpur. And in the meantime, do take care and be safe. Bye bye.